Good morning, everybody. It is Thursday, May 12th, 5:57 a.m. Central Time as I speak here. July corn futures down 2 3/4 at 7.86 1/4. December corn up 1/4 cent at 7.36. July soybeans down 10 3/4 at 15.96. November beans down 9 3/4 at 14.62 1/2. July Chicago wheat down 3 1/4 at 11.09 3/4. July Kansas City wheat down 4 3/4 at 11.95 3/4. July spring wheat down 5 at 12.51. If you guys are listening on the podcast, appreciate it. I could use some more reviews on that Apple app in particular. Help me out there if you can. If you're watching on YouTube, subscribe to the channel, like these videos, leave me a comment. Let me know what sort of planting progress is occurring in your neighborhood. If you need some additional information from me, go to my website. It is www.standardgrain.com. Go to that website, check out my premium subscription service. You should sign up for this deal today. I send my premium subscribers a ton of information every single business day. It's $50 a month. There's no other fee. There's no other obligation. Nobody will try to sell you anything else. You'll get my morning email, which goes out before 6 a.m. Central every single business day. You'll see every overnight headline, weather maps, charts, graphics, all of my grain marketing recommendations. You will also see my subscriber-only videos, and I do a new one every single day. Yesterday's video, I talked about this. What if U.S. corn acres fall by 2 million? And I did some balance sheet work, talked about the prospect of, prevent plant and acreage switching, specifically in places like North Dakota, Minnesota, South Dakota, maybe given recent weather events. So if you guys are interested in this sort of content, sign up for that premium deal. As I've said before, everything is mobile friendly, super easily accessible on your cell phone. The videos come at midday via text message. It's one click to watch the video, and that's it. So give this deal a shot. President Biden visited a farm in Illinois yesterday. The White House simultaneously announced new efforts to help American farmers offset the impact of Russia's invasion on Ukraine as it relates to food supplies. Specifically, 3 new measures were announced. The first one is that the White House will increase the number of counties eligible for double cropping insurance. Secondly, the administration will cut costs for farmers by increasing technical assistance for precision agriculture and other nutrient management tools. The third one, funding for domestic fertilizer production will be doubled to $500 million from $250 million initially. The White House has a fact sheet on their website that provides some more details. I don't know if any of this is enough to really have a material impact on U.S. crop production or the supply and demand situation, but it appears as if they're making an effort, and they've got to at least appear as if they're trying to fight inflation, and they are to some extent. It's just a very difficult battle at this point. USDA will release its monthly crop production and WSDA report this morning at 11 a.m. Central Time. We'll get a lot of stuff here. We'll see our first look at the new crop balance sheets for corn, soybeans, and wheat, both for the U.S. and for the world. USDA is faced with a near impossible task here. They've got to try to project production and export prospects for Ukraine, and then how that situation will impact other countries in regard to imports and exports. A very tall task. In regard to the U.S. and production, they're going to start with trendline corn and soybean yields. They'll use the March acreage numbers, so there's not going to be any big surprises there. They may change around some of the old crop demand numbers for all 3 crops. I think the trade is expecting lighter South American corn and soybean crops, lighter estimates for Brazil and Argentina expected. This report will be out at 11 a.m. Central today, so be prepared for a little bit of volatility perhaps around that time. U.S. ethanol production improved for a 3rd consecutive week. Stocks were up a little bit. Weekly output 991,000 barrels per day. That was up 2.3% on the week. Despite that improvement, your production levels still running several percentage points behind what I would call pre-COVID levels, like your 2018 or 2019 levels. Production of ethanol tends to improve seasonally in May and then into the summer. Ethanol stocks increased by 1 percentage point on the week to 24.14 million barrels following 5 consecutive weekly declines. I've got my ethanol stocks chart on the screen here. These are still very high stocks historically, but it's not a level that we haven't seen before. We've come down quite a bit, which is a positive. This is a cause for concern to some extent, the high stocks. If for some reason gasoline demand was reduced by a material amount, the corn grind for ethanol could become reduced. Gasoline demand declined marginally last week. It's running about, I think it's like 5% below your 2019 levels in terms of gasoline demand, and it's held together fairly well. gasoline demand is fairly inelastic. People have to use gasoline to some extent in most situations. Rains move across the Dakotas again here this morning. Rains in southern Minnesota were heavy over the last really just 24 hours, last couple of days. Some of these areas in this band in southern or central, south central Minnesota caught 2, 3, 4 inches of rain locally. I think there were some areas that saw even more than that. So there will definitely be some planting delays in some of these areas. And you could say the same thing about parts of South Dakota, parts of North Dakota, perhaps. And I talked yesterday a little bit about the prospect of some acreage switching or maybe some prevent plant in those areas. When you look at the next 7 days, a lot of the Corn Belt will see an inch of rain or more, give or take, in total over the next 7 days. So no big widespread sweeping systems here, but you'll see some additional rainfall. I will say I believe that planting progress is moving very quickly in a lot of areas this week, and you should see a big bump noted by USDA on Monday afternoon. CPI data for the month of April was hotter than expected. The consumer price index increased at an annualized rate of 8.3% in April. The trade was looking for 8.1. That print was down slightly from March's 8.5%. Gasoline prices up 44% year over year. Food costs up 9.4% according to this data. More rate hikes from the Fed are expected as inflation is ongoing. Traders expect half-point hikes from the Fed in both June and July, and then there is no August Fed meeting. So June and July, you should see more rate hikes. These record high gasoline prices should not help or will not help the inflation situation. The fact that commodity or food commodity prices continue to hold together very well is also not a good thing for the inflation situation. We do have an export sales report this morning at 7:30 a.m. Central Time. Corn sales for old crop expected 350 to 700. New crop 150 to 650 expected. Old crop soybean sales 100 to 600 expected. Same amount expected for new crop. Wheat sales 25,000 to 125 for old crop. Nothing to 350 expected for new crop. Remember, tomorrow is last trading day for May grain futures. Make sure you take a look at any remaining open positions there. The cattle market was mostly higher in live cattle, lower in feeder cattle yesterday. The hog market was lower as well. Cash cattle traded, I believe, 140, mostly in the south, but there was a fairly large range yesterday. The box beef market was lower. U.S. dollar is sharply higher. Stock market's lower again ahead of the cash open. The S&P's down 20. The Dow's down 110. Bonds up a full handle. Gold's down $7. Crude oil is down $1.38, and the June WTI at 104.31. Everybody have a great day today. Remember, report at 11. I will talk to you Friday morning.